Hi friends, very good morning all of you. Welcome back. So we are doing partnership accounting. Now let us go to the next problem, which is illustration number 7. A lengthy problem. So many folds are there in this problem. So you should be very careful. And this problem runs into various accounting years. Like 3 different accounting years will be there. You should be careful. And this problem involves a death of a partner, dissolution of a firm, and takeover of the running business of the firm by another entity. Okay, so as executor, the person who is deceased, the deceased partner, his executor accounts also should be prepared, wherein you pay so many installments, you pay money in so many installments to him. Okay, and the revaluation of assets will be there, goodwill will be there, all the calculations, all the workings we need to do properly. Okay, so let us start with this problem number 7. A, B and C were in partnership, sharing profits and losses in 3:2:1. There was no provision in the agreement for interest on capitals or drawings. A died on 31st December 2010. A died on 31st December 2010. On that date, the partners' balances were as under. Capital account A 60,000, B 40,000, C 20,000. Current account A 29,000, B 20,000, C 5,000, debit. C is debit. Remaining 2, they have not mentioned anything, that means credit. Remember, if it is given in mathematics, they said 2, they don't need to mention that it is plus 2. So if nothing is mentioned, it is plus 2. If it is minus 2, they need to mention minus 2, isn't it? Same in partnership accounting. If they say 2,000, partner capital account 2,000, that means it is credit 2,000. If it is a debit 2000, they have to mention that it is debit. So they mentioned it for C, for A and B they have not mentioned. So if you observe here, capital accounts are given, current accounts are given. So all the adjustments will be channelized through current accounts unless otherwise mentioned. Usually partners sometimes they maintain fixed capital and fluctuating capitals. In capital account they keep constant capital. All the adjustments whatever are to be made, that will be routed through current account. Then by the partnership agreement, the sum due to A's estate was required to be paid within a period of 3 years. So you need to pay money to this guy within 3 years. And the minimum installment of 20,000 each were to be paid, the first such installment falling due immediately after death, and the subsequent installments at half yearly intervals. So what is the date on which he died? 31/12/2010. So immediately you will pay 20,000. That means on 1/1/2011 you will pay 20,000. After that, every 6 months you have to pay minimum 20,000. Okay. So interest at a rate of 5% per annum was to be credited half yearly. That means whatever the running diminishing balance is there, outstanding balance, on that you will pay 5% per annum interest also. In ascertaining his share, goodwill which is not recorded in the books, now it is to be valued at 60,000. Goodwill 60,000, and assets excluding joint endowment policy, which is mentioned below, were valued at 36,000 in excess of book value. 36,000 in excess of book value. No goodwill account was raised and no alteration was made to the book value of assets. Oh my god. Ting ting ting. Pavan sir, what is the meaning of this, Pavan sir? Oh. That means goodwill 60,000 you will not record in the books. Revaluation 36,000 you will not record in the books. So they are to be adjusted in partners' capital accounts. They are to be adjusted in partners' capital accounts. For example, I'll give you one small example. What is goodwill? 60,000, correct? So this 60,000 belongs to whom? 3 partners. 3 partners, C, A, B, C. What is the ratio? 3:2:1. So distribute 60,000 in 3:2:1. Distribute this in 3:2:1. So first person will get 30,000, second person will get 20,000, third person will get 10,000, correct? So this is immediately before death. After death, that 60,000 will be enjoyed by remaining 2 people in 2:1 ratio. A died, remaining B and C will continue in 2:1 ratio. No? So after death, 60,000 divided by 3 into 2, B will get 40,000 and C will get 20,000. Okay, now how this is to be done? Look here. Problem number 7. Working note 1. Goodwill. Particulars A, B, C. Okay, now goodwill before death. So total 60,000, no? So here ratio is 3:2:1. So distribute that in 3:2:1. In 3:2:1, when you distribute, it will be 30,000, 20,000, 10,000. Okay, so goodwill after EA's death. Goodwill after EA's death. So total 60,000 between. So A will be 0. So it will be in 2:1. It will be in 2:1 between B and C. So B will get 40,000. C will get 30,000. Sorry, 20,000. So gain or sacrifice. A sacrificed 30,000. B gained 20,000. C gained 10,000. Correct? Basic mathematics. So you understand this calculation. So because of A's death, A's 30,000 goodwill is sacrificed in favor of B and C. So before A's death, imagine I am B. Before my partner, my business partner's death, I used to have a share of 20,000 rupees of goodwill, but he died. My goodwill has become 40,000. So don't you think this 20,000 I have to pay to that guy? So simple. Since goodwill should not be continued or recorded to the books of the firm, adjustment to be made to the current accounts of partners. So A will get 30,000. A will get 30,000. Okay, so this account is credit. B will pay 20,000 to A. Debit. C will pay 10,000 to A. Debit. So this is the accounting. You understand? So B's account will be credited with 30,000 goodwill. A and B's account will be debited with 20,000, 10,000 in favor of C. This is how we need to do. You understand this? Same thing is to be done for revaluation of assets also. So next working note 2. Revaluation of assets. Same thing. Particulars A, B, C, revaluation, profit. They said revaluation profit is some 36,000. They said goodwill is 60,000. Yeah, revaluation 36,000. So this is 36,000. So 36,000 is apportioned in 3:2:1. 36,000, take calculator. 36,000 divided by 3:2:1, 6. That is 6,000. So 6,000 into 3, 18,000. 2, 12,000. 1, 6,000. Okay, so after death, A will be 0 and B and C will enjoy this 36,000 in 2:1 ratio. So 36,000 divided by 2. 36,000 divided by 3 into 2. So first guy will get 24,000. Second guy will get 12,000. So this is 3:2:1. Next one is 2:1. So what is the gain or sacrifice? 18,000 credit. Here what is your gain? 12,000 debit. 6,000 debit. That means effectively B will pay 12,000 to A, C will pay 6,000 to A. So A sacrificed 18,000 of revaluation profit. He got cash. That's all. So you understand these first two working notes. Working note 1 we calculated for goodwill, working note 2 we calculated for revaluation loss. If you want, you can write the journal entry also. Journal entries are not required in the question, but if at all you want, you can write like this. B's current account, debit. C's current account, debit, to EA's current account, credit. So here you will write 20,000, here you will write 10,000, A's current account you will write 30,000. That's all. So you are showing as if B is paying 20,000, C is paying 10,000 to A. That's all. Adjustment. Same journal entry you will write for part 2 also. The amounts being B's current account debit 12,000, C's current account debit 6,000, to A's current account 18,000. You're done. Copy this. Write down the journal entry. Write the second journal entry also. Write the second journal entry also. Are you done? Shall we go back? Okay. Then the joint assurance policy shown in the books at 20,000. Okay. Matured on 1/1/2011. That means immediately on the death of the partner. Realizing 26,000. So what is the policy amount? 20,000. What is the maturity value? 26,000. What is the profit? 6,000. That profit will be apportioned between A, B, C in 3:2:1. Because throughout the policy life, A lived, no. So you need to give the benefit to A also. So this 6,000, what is 6,000? 20,000 is what you paid. 26,000 is what you are getting. 6,000 is the profit on joint life policy. That 6,000 will be apportioned between A, B, C in 3:2:1 ratio. Payments of 20,000 each were made to A's executors on 1/1/2011, 36/2011, 31/12/2011. Okay. B and C continued trading on the same terms as previously. That means 2:1 is carrying. And the net profit for the year 31/12/2011. That means after death 1 year. After death 1 year. So what is the profit? Before charging interest due to A's estate amounted to 32,000. 32,000 you take minus interest paid to A's estate. Balance belongs to B and C only, because this year A is not there. This year partners are only B and C. Whatever the profit is, they will distribute in 2:1. During that period, partners' drawings were 15,000 and 8,000. Okay, we will debit partner account. On 1/1/2012, next day, 3rd year, congratulations. The partnership was dissolved. Very good, congratulations. And an offer to purchase the business as a going concern for 1,40,000 was accepted on that day. So you received 1,40,000. You need to prepare a realization account. Pavan sir, why do we need to prepare realization account? Because when you are selling the business, you need to calculate profit or loss, no? So you need to prepare realization account. In that realization account, you need to transfer the assets and liabilities, then record purchase consideration, then you will calculate profit or loss on realization. That will be distributed to B and C in 2:1. That will be taken to their capital accounts. Then capital accounts will be closed. Then the problem is over. By the time your body will be dehydrated and you want glucovita. Isn't it? Now there is another twist. Pavan sir, realization account you taught us 100 times. In amalgamation we have done that. So we can do that easily. Beta, yes, we can do that easily. But do you know what is the interesting story here? Assets and liabilities values are not there. To calculate the assets, you need to prepare one more balance sheet. So on 1/1/2012, you sold the business, no? On 31/12/2011, you need to prepare balance sheet. In the balance sheet, Capital of first guy, capital of second guy you need to write, and A's executor's liability you need to write. If you have current accounts, you need to write current accounts also. Then whatever the balancing figure is, that will be net assets or fixed assets in the company. So you will get balance sheet like this. Balance sheet, when you prepare balance sheet, A's executor on the credit side, liability side. B's capital, C's capital. This is total liability side. On the asset side, if at all, any current accounts are there, you will write B's current account, C's current account, if they are there. If they are not there, you will not put anything. Then the balancing figure will be fixed assets. This fixed assets will be taken to realization account. Pavan sir, what to do now? Take a water bottle, open cap, drink. Understand? Okay, so on 1/1/2012, partnership was dissolved and an offer to purchase the business as a going concern for 1,40,000 was accepted on the day. A check for that sum was received on 30/6/2012. The balance due to A's estate, including interest, was paid on 30/6/2012. And on that day, B and C received the sums due to them. You are required to write up the partner's capital account and partner's current account from 1/1/2011 to 30/6/2012. Show also the account of the executors of A. Though they have asked you simply prepare partner's capital account, there are so many working notes we need to do. Already 2 working notes I have shown you. More we need to do. So shall we start? So we'll start with partner's current accounts. So 2 working notes are over. Now prepare partner's current accounts. So what is the date we are preparing? When this gentleman died? This gentleman died on 31/12/2010. 31/12/2010. Okay. Particulars A, B, C. Particulars A, B, C. Copy karo, paste karo. This is our partner's current accounts. Okay. Now write down by balance. What is the balance in partner's current accounts? What are the balances? They have given 29,000 in A positive, in B 20,000 positive, in C's account I think they have given negative 5,000 negative 5,000. Opening balance to balance. Correct? Then we should give the effect of these 2 working notes. Above working notes, look at the 2 working notes, we need to give the 2 working notes effect. Okay, so in A's account we'll write by B's current account, by C's current account. These 2 are for goodwill. Then again by B's current account, by C's current account. These 2 are for revaluation profit. Here we write to A's current account for goodwill, for revaluation profit. Okay, so goodwill, go to goodwill working note. 20,000, 10,000 debits in B and C, 30,000 credit in A. Okay, so here 20,000, 10,000. Here 20,000, 10,000. So look at the entry properly, you understand. Whatever the journal entry we have written, if this journal entry is not there, it will be little confusing. So In B's account, 20,000 debit. C's account, 10,000 debit. A's account, 30,000 credit. Whatever, that is what we have done. Then the second entry, 18,000 here. Okay? No, sorry, 12,000. Here, 6,000. So total 18 in his account. Here, 12,000, 6,000. Try to understand whatever we have done. Try to understand whatever we have done. Okay, then anything else? One joint life policy is there. By profit on joint life policy, 26 minus 20. So you pay 20,000, you got 26,000. So you got a profit of 6,000. That will be 3,000, 2,000, 1,000. Now balance. Balance these accounts. $80,000 in first guy, 22,000 and 1,000 in second and third guys. Okay, so bring the same amounts here. 80,000, 22,000. No, here 32,000 is there. Here 10, 5, 6, 21,000 is there. Okay, so here we'll write to balance transferred to A's executor account. A died, no? So you need to transfer this balance to A's executor account, 80,000. So A's account is tallied first. In A's account, there is 80,000 rupees. That 80,000 rupees will be given to the legal representative of A. That is what we call A's executor's account. Okay, then look at B and C, balance B and C. So here 32,000 is there, here 22,000 is there. So we have to write another 10,000 here. By balance carry down 10,000. Now it is tallied. So here 21,000 is there, right? 20,000 here, balance tallied. So here we write on 1/1/2011 to balance brought down. 0, A died, poor guy. So he is no more, rest in peace. 10,000 for B, 20,000 for C. These are debit balances. That's it. So from this we understood that we need to give 80,000 to this gentleman, Mr. A. We need to pay 80,000 to this gentleman, Mr. A. So you understand this? Read it carefully once. Take 1 minute of time, read it carefully. You got it? Now what we do is we prepare A's executor's account. We prepare A's executor's account. Particulars rupees. Particulars rupees. Okay, particulars column, kitchen. That's it. So we'll do one thing better. We write a date also. In A's account, let us write a date also. Okay. So on 1/1/2011, you need to pay money to ACE executors from his capital account. Just now we prepared 80,000 came from this capital account. Now see here, what is the journal entry you pass? One journal entry also I will show you. On death of Mr. A, he has capital, how much? Go to the problem. 60,000, and in current account 80,000. Just now we calculated. This should be given to Mr. A's executors account. So what will be the journal entry? Mr. A's capital account debit 80,000, sorry 60,000. Then Mr. A's current account debit 80,000 to Mr. A's executors account 1,40,000. You understand it? This is the journal entry. So in A's executor account, by A's capital and by A's current account, by A's capital account, by A's current account. So capital account is 60,000, current account is 80,000. So total how much you need to pay? You need to pay 1,40,000 to this guy. And they said on this day they paid some amount to Mr. A. Now how much is paid? You have paid 20,000 to Mr. A. So when you pay 20,000, what will be the journal entry? A's executors account debit to bank account, being first installment 20,000 paid. Correct? So what will be the balance? To balance carry down will be 1,20,000. Why? So total here credit side it is 1,40,000 now. So here 1,40,000. So balance is 1,20,000. So this balance is on what date? On the same date, 1/1/2011. So when will you pay the next installment? Next installment is, see, you write next 30 or you write 1/7/2011. By balance brought down 1,20,000 to bank 20,000. Correct? But you need to pay interest now. You need to pay interest now. Okay. So this is 1/7/2011. If you want, you can put the date here, same date, and here also you can put the same date. Here next date will come. Now you need to pay interest also to them, no? So interest will be charged by interest. How to calculate? 1,20,000 is the outstanding into what is the rate given in the problem? 5% per annum, calculated on half yearly basis. 5%. 1,20,000 into 5%. Okay, so calculate 1,25,000, 1,20,000 into 5%, how much? 6,000 for half year divided by 2, 3,000. Correct? So into 6 months, no? 6/12. So you will calculate 3,000. So how much you need to pay to this guy? You need to pay 1,23,000. In that, how much you have paid? 20,000. So on this date, to balance carried down will be 1,23,000 minus 20, 1,03,000. So it will be 1,23,000. So this is 1 year. This is one episode. You understand this? If you understand this, we keep repeating the same thing for next 6 months, till we repay it, we'll be doing the same thing. Now look at the problem. When A's executors are paid completely, The balance due to A's estate including interest was paid on 36/2012. That means up to 36/2012 this ledger account will be continued. 36/2012. Okay, now so this half year is over, then the episode comes to 31/12/2011. Okay, or you can write same date here, then bring same date here by balance, brought down 1,03,000. Then on 31/12/2011 calculate interest. How much? On 1,03,000 into 6%, sorry 5% into 6 months. Calculate and tell me. 1,03,000 into 5% divided by 2. Is it 2,575? But despite that, in the problem they said you are paying only 20,000 to him. On that day also, 31/12/2011 also, how much you paid to bank? 20,000 paid. So what is the total here? 1,05,575. So bring it to the debit side also. 1,05,575. Okay, so here minus 20,000. 1,05,575 minus 20,000. 85,575 is the balance. 85,575 is the balance when this balance is on 31/12/2011. To balance. Carry on. On next day, 1/1/2012 by balance 85,575. Okay, then you need to calculate interest. 36/2012 by interest. How much? 85,575 into 5% into 6/12. 85,575 into 5% divided by 2. It is coming to 2,139. Is it right? 2,139. Okay, now what is the total amount we need to pay? 87,714. Good news, we have paid them 87,714 to bank. Why? Because they said on 36/2012 the whole amount in Mr. A's account including interest is repaid. So this is A's executor's account. Okay, do the calculations properly. Check the calculations properly. Are we done? Hold on, so much of problem is pending. The biggest question is, how will a student be able to complete this problem within 20 minutes in the exam? You cannot take more than 20 minutes, no? Sir, can anyone complete this problem in 20 minutes, sir? If you practice, you can. I used to practice problems with time, okay? Stop timer will be there, no? So in mobile, stopwatch will be there. So I'll start with stopwatch, I'll solve the problem and then I look at it. So that 16 marks, 20 marks, amalgamation, internal reconstruction problems will be there, no? That I used to solve in 6 to 7 minutes. Seriously, now one student will ask, sir, are you joking? If I am joking, why will I get 90 marks? Why will I get ranks? You have to practice like that. Chalo, anyway, once you are thorough with this, can we go to the next step? Yes, the next step is, look at the problem. They said here. So after the death of A, B and C continued trading on the same terms as previously and they earned a net profit of 32,000. This 32,000 is before charging interest. Good news, already we calculated interest and we know for the year 2011 what is the interest. So we will show this 32,000 for 31/12/2011. Okay, now look here. Working note 3. Profit for the year ending 31/3/2011. 31/3/2011. Yeah. So profit before A's executors interest 32,000. So they clearly said profit before A's executors interest is 32,000 for the year, less interest on A's executors account from 1/1/11 to 31/12/11. So full year. This is 1 year, no? 1 accounting year. So for that, no, it is not 31/3. It should be 31/12, no? Yeah, we are following calendar year. Okay, so for full year, how much I paid? Now go to A's estate account. In 2011, what is the interest I have paid? This is one interest. Correct? Huh? This is interest. And this is also same year because 6 months, 6 months, no? So can I say interest paid for the year 2011 is 3,000 plus 2,575? So 3,000 plus 2,575, that will be 5,575. So net profit after interest, can I say it is this minus this? So A's share, so A is died now, so B's share, C's share. So how much B will get? 26,425 into 2/3. How much the other guy will get? 26,425 into 1/3. Calculate and tell me. Is it 17,617? The second guy, is it 8,808? This is the share of profit that is to be taken to partners' current accounts. That is to be taken to partners' current accounts. So you understand this working note 3. So working note 1 we have done for goodwill. Working note 2 revaluation profits. Working note 3 calculation of profit for the year 31/12/2011 and distribution between B and C. You understand? Okay, now we will prepare current account of partners for this period. Current account of partners. So somewhere we prepared some current account. So can we copy that? Partners current accounts. So we'll continue this. So partners current accounts. See, you can prepare another table. It is not extension of the previous table, okay? That is one note. After that, you are preparing it again. Now you might say, Pavan sir, you have prepared that. After that, A's executor account. After that, working note 3. Baba. After that only prepare. I am taking the same columns for alignment, formatting. You need not continue that, okay? If you want to continue also, it is fine. You can leave the place And then you can write, but that is little complicated. Partners current accounts as on 31/12/2011. Okay. Now we have the balances 10,000, 20,000 here. These will be brought forward, isn't it? So to balance brought forward. A will not be there, no? Why am I preparing A? A, hat jao, bhai sahab, sorry. Only B and C will be there. Okay, so 10,000, 20,000. If you want, if these are confusing you, we'll hide these two columns. So particulars, and we'll do only B and C. To balance brought down 10,000, 20,000. Correct? Then do we have any other transactions this period? Yes, we do have. They have given drawings and we have calculated profits. You need to take drawings, you need to take profits also. Correct? So tell me, what are the drawings they made? Look at the problem. Read the problem and tell me. During that period, the partners' drawings for 15,000 and 8,000. Two drawings. 15,000, 8,000. Correct? Is there anything else? Yes. Just now we calculated. Look here, these two are profits, no? These profits are to be given for this period to them by P&L account. By profit for the year. You can write by P&L account also. 17617-8808. Usually they write P&L appropriation account. But I do not prefer writing appropriation account. So I'll write P&L account. It is same actually. If you want, you can write down by P&L appropriation account also. Okay, by profit for the year you have written. Now what to do? What to do? Balancing. What will we do? Okay, so here it is debit 25,000. Here it is debit 28,000. So here also I will write 25,000. Here also I will write 28,000. So write down by balance carried down. So can you tell me what is the balance? 25,000 minus 17,617. You got 7383. So calculate for C also. So this is partner's current account. You're done? Then we will prepare one balance sheet for 31/12/2011. Balance sheet will prepare for 31/12/2011. So we'll prepare it here. Balance sheet of the firm as on. Actually, one more column is also not required. Particulars rupees is enough. Particulars rupees. So on this day, do I have capital accounts of partners? Yes. What are the capital accounts of partners? Tell me. Partners capital account. B's capital will be there. C's capital will be there. And A's executors account will be there. This is the liability. First two are capitals. Third one is liability. What is B and C capital? Go to the problem. The partners capital accounts are 40,000, 20,000. Since we are following current accounts, capital accounts are unchanged. So I will take only 40,000. 20,000, no, 20, yeah, 20,000, and I'll write 60,000 in the outer column, or you can write simply this two in the outer column also. Okay, then A's executor account on 31/12/2011. Go to this 31/12/2011. A's estate is showing 85,575 balance. 85,575. So can I write 85,575 here? Yes. Do we have any other debits? Yes. Just now we prepared current accounts, no? So in that current accounts, these are showing these two balances. So they are debit balances, no? To balance brought down 7383, 19192. So that 2 will write here. Partners current accounts. B's account, C's account. So how much it is? 7383 19192. Okay, now we'll do balancing. Balancing figure will be fixed assets 145 585. 145,585. Now you tell me what is the fixed assets balancing figure. Tell me, calculate and tell me. So can I say this minus this minus this? 119010. 85575. 85575. So 85575 beta. 145575. 1,19,000. Fixed assets is the balancing figure. Now Chintu will get it out. Pavan sir, why do we need fixed assets? Beta, we are preparing realization account now. We are selling the business. We need to prepare realization account. In that realization account, fixed assets will be taken as 1,19,000. Correct? Okay. Now go back to the current accounts. This partner's current accounts are there, no? I am releasing all the columns. So this partner's current accounts are there for first year 31/12/2010. Then we prepared for 31/12/2011. Now we need to prepare this on the date of sale. And whatever the current account is, that should be transferred to capital account. Whatever the capital accounts are, that will have realization profit and loss also. You understand? So put the heading. Simultaneously we have to prepare two things. One, realization account we prepare. Realization account. Particulars rupees. Particulars rupees. Realization account we prepare. One ledger account. Then partners capital accounts, current accounts also we need to prepare. Okay. Okay, so for the sake of ease, what we do is, this balance sheet is there, no? I'll move this balance sheet from here. I'll copy it somewhere else. So now again I am writing the pro forma of partners current accounts. So you need not continue the same account. You can put heading again, partners current account. Partners current account. This is for the period 36 2012. That means this day you are selling the business. So what I am doing, look at the board properly. Partners current accounts and realization I am preparing simultaneously. Why? Because in realization, if you are earning profit or you are suffering loss, that should go to partner current account. Then partner current account balance should go to partner capital account. Then partner capital account should be closed. This is the process. So in realization, we write two assets. Pavan sir, why are we writing? Array, you remember how to prepare realization, no? All assets to be debited to realization account. All credits, all liabilities should be credited on the realization in realization ledger account. So realization to assets. Just now we calculated somewhere 1,19,000 we got, no? What is the assets we got? Hey, where is balance sheet? 1,19,000. Correct. So to assets, write 1,19,000. Okay. Then by purchase consideration, by bank account, 1,40,000. How much we received? We received 1,40,000. So is there any other expense? Yes. This 6 months we are preparing realization account on 36/2012. In the previous P&L, we have considered interest paid to ACE account. Interest paid to ACE executor's account, we charge it to P&L. What about the remaining 6 months? Now, ye dekho. 3,000 interest we have taken to 2011 P&L. 2575 we have taken to 2011 P&L. Who will bear this 2139? Current year P&L. Because you are selling the business, you are not preparing current year P&L. So this 2139 you will write in realization account. In realization account to interest on ACE executors account. 2139. Balance is the profit to realization profit. Now this goes to B's account, C's account. So how much do the balance? Total 1,40,000. This side also 1,40,000. So total profit how much? 1,40,000 minus 119,000 minus 2139. So 18,861. Total profit is 18,861. That should be apportioned between B and C in the ratio of 2:1 divided by 3 into 2 is equal to 12,574 to this guy. 12,574 to this guy. In C's account, one portion belongs to him. 6,287 to this guy. 6,287. Okay. That's all. This is realization account. Realization account is quite simple. Okay. You received 1,40,000 purchase consideration. Credit side you will write. You have assets which are to be sold. That means disposed. So you will write the assets in the credit side. That means debit of realization account. What will be the journal entry? Realization account debit to assets account. So in the assets account it is credit. In realization it is debit. So you have written two assets. Then you have paid interest to ACE account 2139. Then remaining is the profit. You have distributed to these two guys. These two numbers 12,574 and 6,287 should be taken to current account now. You understand this realization account? Copy this. Done. Copied. Now let us go to partners current accounts. So to balance brought down 7383 as above 19,192. Okay. So now you have realization profit. By realization profit. What is realization profit? It is there on the screen itself. 12,574 to B and 6,287 to C. Correct? Whatever the balance is, we'll transfer to capital account. That's it. Okay. So here it is debit or credit. Credit is high 12,574. 12,574. Here this is high 19,192. 12,574. 19,192. Now do balancing. Here by balance. By balance. Okay, carry down. Or you can write down, we are transferring it to whose account it is? C account, no? By C's capital. So current account you are transferring to capital account. How much? This minus this. Basic balancing I am doing, nothing great. Then here also to B's capital account. It is this minus this. That's all. 5191. So the balances in current accounts on the date of sale of business are transferred to capital accounts. Now the closing ceremony, ultimate closing ceremony is partners capital accounts. Here you will come to know whether you are doing problem right or wrong. Okay. So partners capital accounts. So in partner capital accounts, you will start with by balance. So there are no adjustments. Till now we did not adjust anything in capital account. So we'll take that same as it is, 40,000, 20,000. Okay. So same 40,000, 20,000 we'll take. Okay. So tell me what next? Transfer from current account to capital account. So to C's capital account. So C's current account. C's current account how much? 12,905. Here by B's current account. From B's current account 5191. You understand these two entries? You understand these two entries? Okay, now balancing. Simple. So here add these two numbers. 45,191. Add this 20,000. So here you will come to know whether you have solved the problem correct or wrong. Okay, now here take 45,191. Here take 20,000. Okay, first do balancing is equal to this minus 0. 45,191. Here it is this minus 12,905. These are the balancing numbers. Now you tell me, my dear Dink Chika friends, what should I write to this? I sold the business. I sold the business. In the question, if you read carefully, a check for the sum of 1,40,000 was received on 36/2012. The balance in A's estate including interest was paid on 36/2012 and on that day B and C received sums due to them. So this is, my dear friends, to bank account A and B received money. Now I'll tell you one simple equation to check whether your solution is correct or not. Okay, cash received on sale of business. How much? 1,40,000. In this, paid to A's estate, B, C. So to B, how much you have paid? 45,191. 45,191. To C, how much you paid? 7,095. 7,095. To A's executors on, see, this sale of business happened on 36/2012, right? On this day, how much you have paid to A's estate? A's estate 87,714. A's estate you have paid 87,714. 87,714. Add these three numbers. Yay! 1,40,000. So you received 1,40,000 on sale of business. You paid to A's estate, B, C. Khatam. Sir, how simple you said the last three lines, but how big the problem is. Sare. Congratulations. Now imagine, if this question is given in the exams, what will you do? Solve this problem thoroughly 2-3 times. Okay, don't conduct audit of the answer. Don't check whether Pavan sir gave correct answer or no. No. Try to understand it. Then open the textbook question. Put one white paper, rough book, and then solve it yourself 2-3 times. Then you will understand. Okay. With this, problem number 7 is also over. Okay.